In this video, we will learn about the merits of net present value methods. So, the merits of NPV method. So, basically, there are 5 merits of NPV. The first merit is shareholders wealth maximization. Second is time value of money. Third one is measure of the project's true profitability. Next is value additivity principle, and last is the best decision criterion for the selection of mutually exclusive projects with equal economic life and no funds constraint. So we will learn one by one each merit of NPV method in the subsequent slides. So first one is shareholder wealth maximization. So you know that shareholder wealth maximization is the basic objectives of financial management. So the NPV method, which is based on time value of money concept, and the greatest merit of NPV is it is fully consistent with the aim or objectives of the shareholder wealth maximization. The basic principle of finance is net present value. So NPV, another name is wealth. So wealth maximization means an increase in the market price of equity shares of a company. So suppose a company is considering project A and we find positive NPV with respect to this project. So if market value of a firm before consideration of the प्रोजेक्ट को शुरू करने से पहले यदि फर्म का मार्केट वैल्यू सपोज 1,00,000 रुपए है एंड फर्म हैज़ स्टार्टेड प्रोजेक्ट ए और इस प्रोजेक्ट ए में पैसे इन्वेस्ट किया और उस इन्वेस्टमेंट से फर्म को पॉजिटिव एनपीवी मिला 5,000 रुपीज़. So we will add this positive NPV in the market value of a company. So due to this project, market value of the firm has increased and it has become 1,05,000. Okay. So value maximization always shown in the increase in the market price of equity shares of a company, and positive NPV of a project increases the market value of the firm. So this is the first merit or first characteristic of the NPV method. It is highly as well as fully consistent with the wealth maximization objectives of a firm. Second is time value of money. NPV method recognizes time value of money concept. What is the time value of money? As per time value of money, a rupee received today is worth more than a rupee received tomorrow. So present value या present money is more valuable than the same receivable in the future. And by the use of time value of money concept in the NPV calculation, all cash flows, both inflows and outflows, are expressed in terms of their present values. Means present values are the equivalent values. All cash flows are defined in a common information, and that common information या common input is the present value. Okay. So in this example, there is a calculation of present value of cash flow after tax. So total value of cash flow after tax is the 93,000 for machine A and for machine B. 93 and 93,000, right? So this is the total cash inflows, rupees 93,000 for machine A and machine B. But present value of machine A and present value of machine B is different. And further, the NPV of machine A is 13,520 and NPV of machine is 15,396. So what it means, both present value and NPV are different. The difference arises because of pattern of the cash flow streams. So what is the pattern of the cash flow stream? So in case of machine A, in the beginning years or in the earlier years, cash inflows are less. In the later years, cash inflows are more. But in case of machine B, in the earlier years, first year and second year, there is a more cash inflows. So due to the more cash inflows, in case of machine B, there is a result of high NPV, because earlier benefits are more preferable, more valuable than the later years benefits. Okay, so because earlier benefits can be reinvested for earning extra returns. So due to this feature of time value of money concept, this NPV is highly considering the merit of time value of money concept, and accordingly in case of project B, we are getting higher NPV than NPV in respect of machine A. So this is the second merit of second merit of NPV method. Third is it is the measure of the project true profitability. Okay, so first of all, in the NPV calculation, we consider all cash flows from the beginning of the project till the end of the project life. Total benefits arising or occurring over the whole life of the project are considered. And NPV method is based on, one is the estimated cash flows, cash inflows and outflows both are estimated, and the discount rate, which is known as cost of capital, hurdle rate, cutoff rate, like that. And in case of discount rate, it is assumed that it is known in advance and which remains constant for the calculation of NPV with respect to a project, right? So on this feature, consideration of all cash flows and calculation of present value of cash benefits over the entire life of the project, we can say that NPV is a measure of the project's true profitability. Next is value additivity principle. This is also one of the most important merit of a NPV method. What is this value additivity principle? So in this principle, if a firm is considering two or more projects like project A and project B, so independently we will calculate the value of NPV of project A, and separately we will calculate NPV of project B, and both projects NPV are added. So NPV of A plus B is equal to NPV of A plus NPV of B project. This is called the value additivity principle. But before the calculation of NPV, we assume that we are using the discounting process for finding out the present values of cash flows. So, and first of all, NPV of projects can be calculated and further it is added. And it implies that if we know the NPV of individual projects like A and B, so value of the firm will increase by the sum of their NPVs. If NPV of project A suppose is 5,000 and NPV of project B is 7,000, so together NPV of A and B is 12,000. So this amount will be added in the value of the firm. Suppose value of the firm before consideration of project A and B are 1 lakh. So after adding NPV of project A and B, it becomes 1,12,000. So firm value has increased. So value additivity is an important property of an investment criterion because it means that each project can be evaluated independent of others on the basis of its own merits and characteristics. So this value additivity principle or merit is only applicable with respect to the NPV method, right? And last is the NPV method is the best decision criterion in case of mutually exclusive projects. So firstly, what is mutually exclusive project? So mutually exclusive projects or decisions are those projects or decisions that compete with one another. If A and B are two projects, both are competing with one another, so acceptance of one, consideration of one project eliminates the other. Means acceptance of one results into rejection of another project. So NPV is the best decision criterion for mutually exclusive projects. Condition is that both project is having equal economic life and there is no constraint of funds. Okay, so with these two conditions, in case of mutually exclusive projects, we can say that NPV is the best decision criterion. Okay, so in the next video we will learn about demerits of NPV method. Okay, so thank you very much.